Greg Foran will outline the main details of the recapitalisation package and the rights offer before we move to questions. And on that note, I'll hand you over to Dame Therese and Greg.
Thanks, Matt. Kia ora koutou. We appreciate you taking time out of your evenings to join us. Today, we're announcing a $2.2 billion recapitalisation package to refuel Air New Zealand for its recovery. This is a hugely significant milestone for the airline after 2 long years of turbulence. This package will help us to get back to doing what we love, connecting Kiwis with each other and New Zealand with the world. When COVID-19 struck in March 2020, our airline was hit hard. International routes were closed, planes were parked, and the number of Air New Zealand employees was reduced by nearly a third. Almost overnight, our passenger numbers halved and demand dropped 95%. With the support of the New Zealand government, our customers, and our people, we were able to keep the country connected. While airlines around the world grounded fleets, we kept ours in the skies. We flew every day, bringing in vital supplies, flying Kiwis home, and keeping New Zealand exports moving around the world. While we know there are still bumpy skies ahead, the timing is right for us to position the airline for recovery. New Zealand is preparing to reopen borders to international visitors, and we are certainly looking forward to returning to key international destinations. Just last week, it was good to see some of you here as we announced our newest route, New York, which will start in September. We believe the steps we've announced today will position our airline to survive, then revive, and finally thrive. Air New Zealand has tried to take a measured and sensible approach to this recapitalisation, and we have been guided by 3 principles: ensuring we have sufficient funds to deliver on our strategy and position ourselves for recovery, retaining a degree of flexibility to respond in a still highly uncertain environment, and seeking to maintain our investment-grade credit rating. The board and I are confident this package delivers on those principles, and I'm excited about the opportunity the recapitalisation provides through an approximately $600 million debt capital markets issuance before the end of June and depending on market conditions. And finally, a new $400 million Crown loan facility to replace the existing standby facility, providing additional liquidity if needed in exceptional circumstances. This package will allow us to repay the $850 million currently drawn under the Crown loan and provide a further approximately $950 million to strengthen our balance sheet, improve liquidity, and help position Air New Zealand for recovery. It's incredibly important to us that this recapitalisation is fair to all of our shareholders. That's why we have chosen an approximately $1.2 billion rights offer structure, which will give all eligible shareholders in New Zealand, Australia, and certain other jurisdictions the opportunity to take up more shares in Air New Zealand. It's fantastic to have the Crown's continued support, and the Crown has committed to take up all their rights under the rights offer and maintain a 51% majority shareholding. Eligible shareholders will be able to purchase up to 2 new shares for every 1 share they currently own in the airline, at an offer price of 53 New Zealand cents per share, which represents a discount to the prevailing share price. If those shareholders decide not to participate, they'll be able to sell their rights on the NZX. Or if they do nothing, they may receive some value for them through a shortfall book build. That's a process Air New Zealand will carry out to sell any outstanding rights at the end of the offer period. There are 3 key time periods. The offer will open from the 6th of April to the 2nd of May, when the shortfall book build process will occur. Shareholders will be able to trade their rights between the 4th and 26th of April, and the new shares are expected to start trading on the 9th of May. Thank you, and I'll now hand over to Greg to give some insights into the airline's strategy to survive, then revive, and finally thrive. Over to you, Greg.
Thanks, Dame Therese, and good evening, everyone. You know, it's been near on 800 days since COVID began impacting Air New Zealand. And when that happened, we took decisive action to ensure the airline's survival, and we mapped out a recovery plan for the company to survive, revive, and then thrive. Now the borders are set to reopen and the restrictions we're facing travellers are falling away. We're seeing increasing staff numbers as we begin to reanimate our aircraft. And of course, we've just recently announced our non-stop service to New York. That's going to take off in September. Today, as we announce the package that will help refuel our recovery, I'm confident that the time is right for Air New Zealand to undertake this recapitalisation. As well as repaying the Crown loan received during the COVID crisis, this package is going to allow us to continue to focus on delivering our 3 strategic priorities, which are firstly growing our domestic business, because that is the jewel in our crown. Secondly, optimising international with a streamlined, more sustainable wide-bodied fleet pointed towards North America and key Asian routes, while making the most of the belly of the aircraft to take New Zealand produce to the world. And then thirdly, lifting our loyalty business with even more benefits for members. Now, while the operating environment remains uncertain and there are challenges ahead, we are targeting a return to around 90% of pre-COVID levels of capacity by FY25. We're expecting domestic and short-haul international to recover more quickly though, and we'll see that ahead of the long haul with increases in domestic capacity in late FY22 and 23, with a small amount of international flying in this period supported by our cargo business. We see a slower build in long haul with improvements in capacity in FY24 and FY25 as we re-establish our long haul international passenger network in line with the anticipated rate of return. As you can imagine, any forward-looking targets in the current environment, including COVID and the situation in the Ukraine, must be viewed with caution. But we're confident in our business strategies, and we're confident that they position us for success once the opening environment returns to something near pre-COVID-19 levels. You know, while the last few years have been tough, we've spent them planning to ensure our network is right-sized to thrive and meet customer demand as and when it returns. And we're encouraged by bookings in March after the recent government announcements. I know after speaking with a number of pilots and crew, they are incredibly excited to see the Mangapare lined up at international airports around the world, putting New Zealand back on the map. And although we're not expecting a swift recovery of pre-COVID international demand in the near term, we're confident that when demand does return, Air New Zealand has the right aircraft, the right network, the right people, and the right strategy to succeed. Dame Therese?
Thanks, Greg. And on the basis of the assumptions and the plan that Greg has outlined, and subject to actual performance, we expect the board will be able to consider dividend payments from financial year 2026. There's still a high degree of uncertainty around the shape of the post-pandemic recovery, but this gives a sense of our objectives and ambitions for the airline as we look towards a more normal operating environment. Thank you again to our customers and shareholders for sticking with us through these turbulent times. And to our people, Air New Zealanders, who remain resilient and dedicated. Today is a significant milestone for our airline, and one I believe will put us in a stronger position as we look beyond the pandemic. Air New Zealand is committed to rebuilding a stronger and more nimble airline that delivers for all New Zealanders. Our shareholders have played an important part in Air New Zealand's 82-year proud history, and we're confident we can emerge from this crisis better than ever, and we'll do this together. I'll now ask Matt to facilitate any questions you have for us at this stage. Matt.
Thanks, Therese. Before we get started, I need to point out that for legal reasons related to securities offers, Dame Therese and Greg can only discuss the basic terms of the rights offer structure and its timings. Also, as you can appreciate, there's a lot on. Dame Therese and Greg need to leave at 7 for investor calls, so we'll ask Dame Therese to talk to questions relating to the offer structure and Greg to talk to our strategy and operations. We'll start with a question from the floor, then we'll go to the phones, and if you're here, could you please use the microphone so people can hear online? Katie.
Kia ora. It's probably a question for Greg, but why now? Why is now the right time to be doing this, given you have looked at doing this in the past? And I guess how confident can shareholders be in Air New Zealand right now?
I'll actually take that question because it's a shareholder matter. I think we've spent 800 days so far in COVID, and we've had some time to think and some time to plan, and we feel that there is less uncertainty than there has been. We can see COVID restrictions easing, and we can see the international borders opening. So while there'll never be total certainty, we as a board and management team believe this is absolutely the right time for us to go and do this.
How much say did the government get in the timing of the capital raise? Would have you preferred to do this earlier?
Well, I think it's been known for several months now, I think since August last year, that we had been planning to defer to the end of Q1 2022, which is exactly where we are now. We've been in discussions with the Crown since the pandemic broke back in early 2020, both in terms of support that they have given us in terms of lending facilities and the timing of a capital raise. So all I'll say is that we're in agreement. The Crown is supporting this capital raise and taking up its portion of shares.
Who'd like to go next? Do we have any on the phone at the moment? No? Dan again.
So basically your second biggest shareholder after the Crown is sort of now Sharesies users. Do you have any special plans about how you will reach out to them? Have you talked to Sharesies? How do you plan to engage there?
Yeah, we've put a lot of thought into how we're going to engage with our retail shareholder base, so there'll be a lot of activity. Tonight's just the kickoff of all of that. And in particular, we encourage everybody, Sharesies, any other retail shareholder or any other shareholder at all, to check out our investor presentation and the offer documents on the investor website that we have up and running. So we have put a lot of thought in, and there'll be a lot of activity in the next 4 or 5 weeks.
I think we've got a question on the phone, Katie, if we can go there first. No, we don't?
If you'd like to ask questions on the phone, please press star 1.
No? Go for it, Katie.
In those discussions with the government, was there any discussion about them increasing their shareholding? And I guess how do they feel about this whole process? Do they feel like this is the right thing for Air New Zealand to be doing?
Well, I won't talk on behalf of the Minister of Finance and the Crown, but all I can say is that the whole time we've been in discussions since the beginning of the pandemic, there's never been any indication of changing the percentage shareholding, and they've just remained resolutely committed to their current sort of around approximately 51%. So that's always been a reasonably stable factor in all of this.
And just on that $950 million that you need, what does that need to go on, I guess, the most urgently? Like, what's needed right now to keep Air New Zealand going as you move into the next phase?
Yeah, Greg, why don't you
talk about sure. We are excited about, what we're announcing today. We think the timing is perfect. We think it's an incredibly fair offer that's been put in place. And of course, it does play, Katie, into the plan that we've developed, KMO, which we've shared. So, you know, we continue to have a look at our domestic operation and see how we can boost that and grow that part of our business. The optimising international component is important, so we're going to have some new planes coming down at a point in time to replace the 777s. We've taken a write down on the 777-200s already, but the 300s will wind their way through. There are other things that we're looking at, such as hangars and also spend in digital. So we've got a business here that we're very confident on. We've got good growth aspirations for the organisation, and we want to continue to invest. And that will include not just infrastructure, but in our people as well. So we're excited about what, you know, we've got ahead.
Got a question on the phone, and just a reminder, if you're watching online and you do want to ask a question, please call in on the phone line. We'll go to the phone now.
We have a question from the line of Giles Bickford from Radio New Zealand. Please go ahead.
Good evening. This is a massive discount, 61% to the last traded price. 53 cents for a new share. Is that because you were told by capital markets and brokers that that was really the best price that you could possibly get?
I think there's a number of factors in terms of settling on the price, and one of them was, obviously we did receive quite substantial advice, which is very helpful. We also compared this to other deals and other discount rates that have been out in the market and with other airlines. So there's been a lot of thinking that's gone on, but we really wanted to position it at a price that would attract the investment from our existing eligible shareholders. And we've structured this deal, all aspects of it, to be as fair as we can to all our existing shareholders because they've stuck with us over the last couple of years. So that's what we're trying to achieve here.
So can I just follow? Does that mean that the government, in fact, was the most influential voice there? They actually basically set the price.
No, the price has been set by the board of Air New Zealand, and we've taken advice from our own independent advisors and looked at market precedents and market conditions and thought about what would be attractive to all our shareholders to encourage the investment.
Can I have just one last supplementary, which is, do I read the documents right that you're not expecting to be back in the black in profit until 2025, 26?
Yes, the numbers are all outlined in the investor presentation, and I think the key thing here is that we've sort of looked back to 2019 as that last year of sort of normal profitability before COVID and thought about when we might get back to those levels. If things pan out in terms of the assumptions, if things happen the way that they might, and those things are outlined in the investor presentation, and so that's what we've kind of used as a guide. But all of that is in the investor presentation, and encourage everyone to have a look at it and read it for themselves and seek financial advice.
Anything else in the room? Well, I think we're quiet for the moment on the phones. Please.
You're about to go into investor calls now and speak with those investors. You've sort of signalled that you're waiting for certainty. You've got this plan for recovery, but what sort of level of confidence are you able to express to them when you go and talk to them? How will you convince them that you can actually execute on this return to profitability in what's still an extremely volatile environment?
I think all we'll say is that there are a number of assumptions, and they're laid out in the investor presentation. And really, it's a question about picking the right time, structuring a fair deal, and all of this is to get us ready to refuel our recovery. There's still bumpy skies ahead. There's still uncertainty, and so we've just picked the right moment. We've done a lot of planning and tried to structure something that's fair for all shareholders. But I think for everyone going to the investor presentation, reading about what we're thinking in terms of our assumptions and what the risks are to the investment as well is really important.
You know, I think the timing on this is actually pretty good. You know, we've had some good announcements here around what's happening in terms of borders. We're seeing, obviously, what's happening overseas with other airlines. And you can never, ever preclude that, you know, we won't be dealing with other issues, and that's part of what happens in the airline world. You always have to be ready for the next issue that could come your way. But we think the timing on this is good in terms of border reopenings and even what we're seeing domestically and around Omicron. And I just stress again, the fairness of what's been pulled together here, I think, is very thoughtful and considered, and, it's been well constructed in terms of ordinary shares and, redeemable shares, and our plan at a point in time to replace that with commercial debt. So very well considered, and, we're really confident of the plan that we've pulled together, and we know that we can execute to that plan. And I have some good confidence, for the things that are in our control, that we're in a good position.
Got the right strategy and the right team, I think, to execute, so.
I might be wrong here, but I thought originally it was talked about a $1.2 billion recapitalisation program. Why is it so much more? What's happened here, or what's going on with that?
I don't think we've ever put a number out there, actually, but there's obviously been a lot of speculation. But the 1.2 billion is the equity component, and the other parts are sitting more in those debt components. So it's about restructuring. I mean, we've got a significant amount of Crown debt at the moment, and that'll be repaid with these proceeds of this issue.
So repaying that Crown debt was important to you guys to be doing
Yes.
that now rather than
Yes.
to wait?
And the reason is that the Crown debt arrangement that was put in place quite early on in the pandemic was only ever meant to be a temporary arrangement. And so this is part of a plan to get us back into a more permanent arrangement that you would normally see with a company with debt and equity. So it's just about kind of strengthening that balance sheet and getting ready to refuel our recovery.
And probably just a process question here, but what happens if people don't take the offer up? What if there isn't enough interest in it?
So for our eligible shareholders who have rights under this issue and they don't wish to or not in a position to take them up, then they're able to trade them on the NZX. And if they do nothing, there may still be some value at the end in the shortfall build process. So again, that kind of goes back to the whole concept of fairness to all our shareholders. Yeah.
On the phones? No? We appreciate we brought you in quite late, and you'll want to look through the investor presentation and ask questions later, so please call the team on that. Are there any other questions from the floor?
People did expect you to raise around about $1 billion, but you've added that debt line. Do you have any sense of how likely you are to draw from that, or is that just there as an emergency if things go wrong down the line?
Good point. The 400 million Crown standby facility is very much that, a standby facility, and it just gives us an added layer of kind of flexibility if something didn't pan out in the future. We don't have any immediate need or urgency to use it, but it's simply there to provide a little extra flexibility. The redeemable share issue of 600 million to the Crown, we're imagining that most of that, a good part of it, say 400 million, will be paid down as we get into the commercial debt markets post the close of this issue.
Okay. I think, unless there are any other questions, we're done. Thank you for being here, and again.
Thanks for coming in so late. Appreciate it. Thank you.
Thank you.